Today, I'm going to show you how to create all the settings required for business performance, as well as how to get the data from the system and what are the informations that the business performance can provide you. The business performance module has also another function that is the absorption costing, and I'm also going to show you how to use the absorption costing function. So just for starting, we need to activate our business performance modules, and for that we come here into the system initialization, and then we have here this option, the configuration wizard. Inside the configuration wizard, we can come into administration, select here the modules to activate, and then we activate the business performance. This is required to activate all the business performance functions we are going to see in these presentations. Besides that, after activating business performance, you can come here into business performance settings and activate the absorption costing function if you want to use it. Okay? In a few minutes, I'm going to give you more explanations about what the absorption costing function is and how you can use it. So all the business performance settings are located here in Financials Business Performance. And the first thing that we have to do is to create the required master data. So we can come here into master data and we create a statement cycle to begin our settings. So clicking here on statement cycles, the system will show us a list of all our current statement cycles, and we can click on new to create a new statement cycle. Here we can define an ID for the statement cycle. We can create one statement cycle for each year, or if you use multiple branches in the same company, you can also identify your statement cycle for each one of the branches, since you can also link the statement cycle to the branch. Then here we define the code, the description, we defined when the statement cycle starts. So for example, I'm going to create one for 2019, and I'm going to set that it starts in January 1st of 2019. All the settings that you see here on the bottom of the screen are linked to absorption costing. So if you don't use absorption costing, you don't need to set this up. Okay, you only have to set the starting of your fiscal year. If you do want to use absorption costing, you have to do the settings in here. So basically, absorption costing is a function that allows you to distribute your actual, let's say, production costs of the month based on your current journal entries to everything that you have produced in a month. So let's say that during the month, you are producing your items, and then all those items are valued according to your current resources rates. And at the end of the month, you have already all your journal entries registering your wages costs, maintenance costs, energy costs, and so on. And of course, all the costs that you allocate into your products, considering the rates of the resources, will never be 100% equal to what you have in your accounting, because the costs registered during the month are based on standard rates we set on the resources. And the absorption costing function allows you to distribute the real cost to what you have produced in a month in order for your production to reflect your current costs of the company. And so for the absorption costing function to work, we have to set the base for distributing the costs. We can distribute the cost to what we have produced in a month, considering our marginal or full costs. I always recommend to use one of those two, because those two represents also the hours and the rates of the resources, and so we can divide it to the resources we use the most, but also considering the costs of the resources in order to don't allocate too much cost in the resource that has low standard cost. And we can also use the hours as a distribution base. So the system will basically grab all the costs we have in our accounting and share those costs to what we have produced in a month, considering the full costs, the marginal costs, or the hours as a distribution based. The absorption costing process basically does 3 different transactions, and the accounts we set in here are linked to the transactions that we can do with the absorption costing. So the first process is to get all the costs we had in the month in our account, in the chart of accounts. So it grabs all the financial data from the month and create one journal entry crediting my cost accounts, all the group of the cost accounts, and debiting my assets. And for this journal entry, it uses this account setting here. That is my cost clearing account. This account will make all my cost group to become 0 since I am appropriating all my costs into my production. I have an account here called cost reversal. This account is what will make all my production costs to be 0 when I get my profit and losses statement. And then I set this account in here, and this will be my credit, and the debit will be done into my assets group in an account that is the cost to absorb account. The nature of this account is like an work in progress account. I have it in here, and this account will register all the costs that will be appropriated to the production in the month. After we have done this first movement, then the system will do a stock revaluation to revaluate the costs of everything that we have produced in a month. And for that, we have to use this account, cost to absorb account. This account will be credited, and the debit will be either on stock if the produced items are still on stock, or in the cost of goods sold account. For the system to identify the correct cost of goods sold account, we also have to set this in our financial accounts determination. So we come here into the GL account determination, and we have to set this account as the price difference account. This is the account that the system uses to when there's not enough quantities on stock when doing the absorption cost. So you also have to set this up. And then we have another account in here that is the standard cost reversal account. Well, if during the month we have valued our production considering our standard costs for the resources, we already have production costs linked to the items that we have produced. And since we are allocating the real costs into the production for the month, we have to revert the standard costs that we have booked into the items we manufactured. So in here, we can set up the same accounts that we use to register the labor cost during the month. So in here is where I have it. So I have my, just let me check it, my production cost account. Let me search in here. So this is my production cost account. This is the account that holds all my standard production and labor costs for the month. And this is the account I am setting here for doing the reversal after I absorb the costs into the product. So this is the third movement that the absorption costing process does, that is to revert the costs that we have booked into the product using the resources rates. And then this last field we have here in our statement cycle is a field that we can use to define, let's say, the beginning balance for the absorption costing process. In here we say for which month we want to set this beginning balance, and clicking on this arrow in here, we can start defining our open values for that month. Okay, now we have created our statement cycle. As I said before, if we do have multi-branches, we have to create one statement cycle for each branch, and then we have to select in which statement cycle we are working on, because all the next master data that we are going to see are linked to the statement cycle. And we can select the statement cycle by clicking in change in here, and it will be in bold. So the bold line is the line that we are currently working on. So if I select 2018, it means that all the master data that I am going to see in the next functions here are related to this statement cycle. After creating all the required master data, if I want to duplicate all the data that I have linked to this statement cycle, I can just click here and copy, define the new ID, and then all the master data linked to this statement cycle will be duplicated to my new statement cycle and link it to it. Okay, so after creating the statement cycle, we come here into the cost centers, and we need to create all the cost centers that will be considered for business performance. We can just import the cost centers that we have in Business One by coming in here and selecting the cost centers. We can click here in All Select, and then Beas will select all the cost centers for me, and I can just click on Apply, and this will create all the cost centers here for me. If you are going to use business performance as a tool to, let's say, enhance your cost calculating possibilities, for you to know exactly how much cost you have associated into each one of your cost centers and also track profits and losses using business performance, you might want to import all the cost centers you have in Business One, both the cost centers you use for profits, for losses, for costs, and so on. If you are using business performance only for absorption costing, you don't need to import the cost centers for calculating profits, because the only thing that matters for absorption costing is the cost centers related to production costs, both the direct and indirect production costs. So after we import the cost centers, we will have them all in here, and we have to do a series of settings for them to work properly. So we just double click the cost center, and then we'll be able to see its code, its description. These two fields comes from SAP. Here in assignment, I can define what this cost center is. I can define it as labor costs, as material costs, or know if it is an overhead cost. I can set that my cost centers will be what we call cost unit. Cost units are like aggregators for different cost centers. So we can, for example, we can have multiple cost centers in our work orders, in our production process. For example, we can have several operations in one work order, and each operation linked to one resource, and each resource linked to one different cost center. And then use one cost unit to redirect all the costs that we had in that work order into one only cost unit. And so we are able to analyze, let's say, in a better way, all the costs that we had in one specific production process, for example. So in this case, we have to create one cost unit for each one of the work orders we have. Another way is to use the absorption costing for having the same analysis. Using the absorption costing, we can know exactly what are all the real costs that we have to for all the orders we produced in a month, and then we don't need to use these cost units. Okay, so the cost units are optional for the process. It's not required to create cost units, but it is possible to use them if you need to group several values from different cost centers into one only cost unit. Then we have this option in here, actually these two options in here to determine distribution keys. We can have a pre-distribution key that is, let's say, a first level of distribution, and then we can have our distribution key for a second level of distribution. If we want to have one distribution only, we can set only the distribution key and not the pre-distribution key. Basically, we need distribution keys when the costs from this cost center have to be split to other cost centers, like in the case of using cost units, for example, or when we are using absorption costing, all the values linked to indirect cost centers, for example, industrial maintenance, quality control, production supervision, these are all indirect cost centers because you cannot link them directly to one specific work order. So in the cases of having indirect cost centers, we need to split its cost to the direct cost centers, because in the end, only the values from the direct cost centers are going to be distributed to production. Okay, this is when we want to use the absorption costing function. And then when we do want to share the cost from this cost center to other cost centers, we can set up the distribution keys in here. And we create the distribution keys here in this function called distribution key. After we create all the cost centers, we can come in here and create all the rules for distributing the costs. And then in here, we can say how we want to distribute the costs to multiple different cost centers. We are going to come back here in a minute. Let me just finish the explanations for the cost centers. Then after we set our distribution keys, we can say, for example, in order to be able to analyze the data coming from these cost centers, if we do want to apply any kind of surcharges on it, and how we want to get data into this cost center. For example, if you want to get data from labor costs, or if you want to set this cost center as belonging to cost of goods sold. This is especially in the case in which we are using business performance for an extended cost accounting and for having more possibilities for a profit and loss statement in Beas. Then we set if we want to add any surcharge for this cost center. And then we can set here, if you want Beas to calculate the cost rates for this cost center based on the real costs calculated from the financial data. This is particularly useful if you want Beas to be able to recalculate the rates of the resources. So if we do set to calculate the cost rates in here, this is what we are going to get in the end. So if we come here into the reports and we come into the cost rate trend report, we can see all the full and marginal costs registered for the resource, and we can see here what are the real costs that came from my financial data and from the time receipts and standard costs I had for the resources. Okay, and then I can know how many hours I had of work in those resources, and I can calculate my new cost rates for the resource. This does not update the resources automatically, but it does provide you some important information for you to be able to recalculate the resource according to the real costs you are having month by month. Okay, so this is what this calculate cost rate option is for. And if you are working with absorption costing and this is a direct cost center, I mean a cost center that is directly linked to work orders and to resources, we have to set absorption costing yes. When we do set absorption costing yes, it means that the cost from this cost center will be distributed into the work orders. If you don't work with absorption costing, then this setting is not relevant. And if you do work with absorption costing and your resource is an indirect cost center, this cost center is an indirect cost center, then you have to set absorption costing as no, because instead of allocating the costs of this cost center into the work orders, we are going to previously distribute its cost into the direct cost centers for them to allocate the cost into the work orders. When we have all our cost centers set up, we can create our distribution keys. The distribution keys works for distributing costs from one cost center to multiple cost centers, or from one cost element to multiple cost elements. We are going to look into the cost elements in a minute. And the cost elements are basically the linking that exists between the chart of accounts and the business performance module. So we can create new distribution keys in here by clicking on new. Then we define an ID for the distribution key, a description for it. This unit is just for information. This is for you to know what are the bases for distributing the cost, but the system does not consider this. Then we can set how the distribution will be performed. We can set up the rates for distribution of cost manually, or we can have it automatically calculated based on the production hours for each cost center or for each cost unit. And we can say if we are setting costs to cost centers or to cost units. After we had done these settings, we can come here in period and we can define the rates for all the periods if we want to do it manually. If we set it to be automatic, then we don't set up the periods. They are created all automatically. So let me just add. And here we have all the periods already created. And the rates are going to be set according to the production hours we had for each resource in this cost center. We just have to set up to which cost centers we want to split data into. So I'm going to set to split the costs into those two cost centers, and then the values will be set according to the production hours we had in the month. If we do want to set it manually, let me just delete this one. Okay, let me now create a new one. If you do want to set it manually, then we can come here into the period, and we could either create one single rule for all the months by selecting standard, or we can here, and then we have here one rule that will be applied for all the months. We can just double click on it, click on new, and select the resources. And then when it's manual, we need to set up the base for distribution. We don't need to set the exact percentage in here because Beas will calculate the percentage based on this value. For example, I could use as distribution base the number of persons I have in each one of the resources. So let's say that I want to distribute value into all those resources in here. Okay, to those 4 resources, and then I have 15 persons in here. I have 8 persons here. Here I have 3, and here I have 20. All this sums 46, but Beas is calculating the sharing percentage based on 100% according to what we have here in this field quantity. Okay, so we don't have to set the percentage. We can have Beas to calculate the percentage for us. Or instead of having one single line in here for all the months, we can just delete this and create one scenario for each one of the months. So we can create one for January and then set the rates for January. All the sharing percentage will be calculated. I update. Okay, and now I want to duplicate this for February and only change the percentage. So I can just come here, click on copy, define that I want to copy this to February, and then I can come in here and change the percentage. And this will be my distribution key, and then I can come in here and say that I want this quality control cost center to be distributed according to my new distribution key. And so Beas will take all the costs associated into this cost center and distribute to my 3 cost centers set up in this distribution key. Okay. Now we need to create our cost elements. The cost elements, as I said before, are a linking that exists between the chart of accounts and the values that are going to be imported into the business performance module for doing all the costing calculations. We could create, for example, one single cost element for all the accounts we are going to import, or we can create one for each one of the accounts, and then we can just select the account in here. I have a list here of all my accounts in the chart of account. I can just click on one and then create the cost elements for that account specifically. Or here I have one single cost element, and I can link the same cost element for all my accounts. When we create a cost element, we can also set if this belongs to labor cost, if this is wages, or material cost, or volume of sales, if this is related to profits, or no, if this is a general overhead cost. We can also distribute the costs from the cost elements. This is an important thing because in the end, the cost element will represent an account in my chart of accounts. So I have this option here, cost element assignment. And I can say, for example, that this account in here will be represented by this cost element. And in some cases, I have to share the costs from one account into multiple cost centers. In SAP, we have the distribution rules that can be set up here in the cost accounting module. So we can set up the distribution rules in here for standard distributions. Or then we could have, here I have one. So I can set up the distribution rule in here to share costs to all those 4 cost centers instead of setting just one cost center in my journal entry. So when I create my journal entry, let me say that I am paying an expense directly from the bank. Payroll expense for vacations. Let's say that I am crediting my bank in 5,000 and registering a cost of 5,000 with vacation expenses. I could say that instead of having one cost center, I'm going to have a distribution rule. And then I could have it empty here, then have only my distribution rule here for my cost. And then instead of setting one cost center, I am distributing the value for this journal entry into 4 cost centers. When we do have situations like this, we need to link this account into one distribution rule in business performance, because Beas does not read the distribution rules from SAP. So if I have one distribution rule in SAP, I have to create the same distribution rule here in business performance. So I need to come here in business performance, create a distribution rule here in my distribution keys that is exactly equal to what I have here in SAP. So here's what I have. And I have exactly the same rule here as I have in here. And if I know that this distribution key is always applied to one specific account, then when I create the cost element for that account, I'm going to add it as food for employees. Then I need to select here that the cost from this cost element will be distributed and will be distributed using this distribution key in here. That is the same that I have in SAP. I just add this like this. Then I come here into my cost element assignment, and I need to say that my cost account, for example, this one as I use in the journal entry, will always be distributed using this distribution key, this cost element that is linked to one distribution key, okay? We can change the distribution keys month by month. This is done by creating new distribution keys in SAP, as SAP doesn't have the possibility of creating several months inside the same distribution rule. And here in Beas, we can just come inside the distribution key and create new periods for it. Okay, so we create all the cost elements we are going to require. They could be direct when we don't want to apply any distribution. And in this case, Beas will read the cost element from the journal entry. Or if we do want to apply distributions to several different cost centers, we can just say that this will be distributed and set the distribution key in here. We could define budgets for this cost element. Here we can click on new and say, what are the budgets of this cost element for the different cost centers? And then we could also have budget distributions. Here we can say, what are the budget distributions we want to have? Here we can say if the costs from these cost elements are fixed or variable. This is for further analysis in the reports from business performance. So for example, this cost element represents fixed costs. I could say that it is 50% fixed costs and 50% variable costs, or just 100% and 0% variable costs. And then there is just one more thing that I need to do, that is set which cost centers can receive values from this cost element. This is very important because if I do create a journal entry for an account set to this cost element and set a cost center that is not listed in here, business performance will not import that journal entry. Okay, so we have to set it here. We can click here on selection for us to select all the cost centers automatically instead of having to select them one by one. And then in here, we can define if this cost element is fixed or variable for each one of my cost centers. For example, for all my direct cost centers, the value from this cost element can be variable. But for my indirect cost centers, then can be fixed. Okay? Now, after we finish creating the cost elements, we have to set them to my chart of accounts using the cost element assignment. So here I have all my accounts in my chart of accounts. I don't need to consider the assets or the liabilities account. I only have to consider incomes and my expenses and my cost accounts. This is what I need to have in my profit and loss statement from business performance. If you are only using absorption costing, then you just need to link. You only need to link the cost accounts, not the incomes accounts. And then we are done with our basic settings. There are a few more things that we could do. For example, if we want to redirect the entire cost from one cost center into another one, we can create a redirection here in this option. So you can come here into redirection cost center, click on new, and then we can say that all the values from this cost center will come into this cost center. And we could also create a structure for a profit and loss statement. This is if we want to have our own profit and loss statement defined in business performance. Basically, we create one line for it here in schema. This is our current profit and loss statement. Then as lines, we can say from which we are getting those values from. We can grab values from different cost elements or cost centers. And then here in the columns, for example, if I have lines for cost elements, I can have columns for the different cost centers that will compose the values for the cost elements. And then this is what we are going to have in our business performance reports. That is the profit and loss statement, detailing values. Here for my cost elements, I have one for accounts and one for depreciation, and I have my columns in here representing my cost centers. Okay, so you could also create your own way of displaying a profit and loss statement based on the data from the business performance module. When we have all our master data set up, we can just start the process of getting values from SAP into the business performance module. So for that, we can come here into the monthly values and we can do a financial import. When I do a financial import, we are going to grab the data from our journal entries in SAP into business performance. We define what is the period for which we want to import data, let's say January, and then we click on import. If we already have data for that period, we are going to get this message. It is saying that data for this period already exists and I can get duplicate entries. This is very important because if you click on yes, you will get duplicate data. So before importing data for one period, you have to come here into your financial data if the data already exists. Then you can right-click in the column posting date and select restrict. Then you can filter for one specific month. For example, let me say March. So I'm coming into March. I'm only filtering the data that I have in March. Okay, then this will display only my financial data for March, and I can click on batch delete to delete all the entries I have for March. And then I can come here into the financial import and import the data for March. Now it says complete. I didn't get any error message or even warning saying that the data already exists. If I do try again, it will say that I already have data. And when I come here into financial data, I can see all the data that I have imported from the system. And here is my data for March. Okay, so if you need to do any adjustments on the financial data that you have, or for example, if you forgot to create a journal entry, or you imported it in incorrect cost center, you need to fix it, you just come here, delete the data you have, import it again. If you had any error when importing the data, you can click here on last error, and it will display the errors for you. Then you can fix it. The errors happen, for example, when you have one cost element linked to the account you have in the journal entry, And the cost center you selected is not linked to that cost element. So this is one kind of error that you can get, and you can see it here. For example, let me show you. Let me select one account in here. Let me post this as March. Or no, let me post this as December, as I don't have data for December yet. Okay, now I'm going to select one cost account. This account must be set for it to be correctly imported. It must be set to one cost element. So in here, I have my cost element assignment. This account is set to my here 23. Here I have the 23 payroll expense tax. This is set to my direct cost element. And I need to have the cost center that I set in here must be linked to my cost element. If it is not, then it will display an error. So here I have my cost element. I have set 0B003. Then in here, if I don't have 0B003 as allowed, let me delete this one. If I don't have it as allowed, then I'll get an error. Let me just add this. Then when I import data for December, I'll get an error. Cost center in distribution not defined for the cost element. So this cost center is not allowed for the cost element direct. After I fix it, I can just import it again. Then I can create a new line here, select the 0B003, update. If I do come here into my financial data and click on last error, I'll get a listing of all my last errors. And after I fixed my master data, I can just import it again. So come here, financial import for December, import, and then no errors. And my data will be here in the financial data for December. Here it is. After we import the financial data, we can import the production activities. The production activities will be the base for when you have your distribution keys based on production hours, and will be extremely important for the absorption costing process, as the absorption process is completely based on the production you had in a month. When you work with absorption costing, you also have to come here into the configuration wizard. And you have to set databases for effective manufacturing services as work order confirmations. If you set it as wage data, absorption costing will not work. Wage data is defined here in the monthly values as wage data. In here, you can manually create your journal entries and set them to the cost elements. This is like data that you create specifically for the business performance module for your extended cost accounting analysis. So this is interesting when you don't want to use absorption costing and you just want to use business performance for your cost analysis. But when you do want to use absorption costing, you cannot use this. You have to get all your work confirmations from the production activities, and you have to import the production activities. Opposed to the financial import, when you do import production activities, you don't have to worry about having duplicate data. You can just import everything again, even if you do have production activities in here. So I have all production activities in here already. I can just import again. And then it will just recreate what I already have. Okay, so I don't have to worry about having duplicate data. Here it will tell me everything that I have imported for all the months that I have. And I can see the details of this. Here I have some distributions, so I can see the distributions in here. And then I can see my existing production activities here in this function. And in here I see a detail of all my production activities for all the months that I have imported. And I can also see to which cost center this production activities is linked to. One important thing, all this data from the production activities come from the time receipts, and the cost center from the time receipts can come from 3 different sources as you define here in the configuration wizard. So here in the configuration wizard, we have the setting in production FDC. We have the setting cost center determined by. I have my database as grabbing data from the resources. We could also grab data from the assemblies or from the persons. If we grab data from the resources, then we need to link the cost centers to the resources. I have here one example. This is a blasting machine linked to its specific cost center. Okay, when you want to calculate the cost rates for the resources, remember when we created the cost centers, I told you that there is an option for calculating the cost rates for the resources. And then there is one report that can calculate the cost rates for each one of the cost centers based on the real data from the month. Then you might also want to create one cost center for each one of your resources. So you can have the system calculating the cost rates for each one of the resources for you. Besides having the cost centers determined by the resources, you could also have them determined from the assemblies. And when you do have that, you have to set the cost centers in your assemblies. So here, for example, I have an assembly and I need to determine the cost center in here. Or I could have the cost center linked to the personnel. Then I need to set in the personnel the cost centers in here. And this is the cost center that it will grab for me when creating a time receipt. Okay. This is a summary of all my production activities for the month. When I have this, I can just go to the final part of grabbing data for a business performance, that is doing the cost calculate. When I do a cost calculate, business performance will distribute all the costs from the financial data into the cost centers, considering all the distribution keys you have created, and then you'll be able to see the business performance reports. Okay, here I have it. Here I can see how much financial data I have imported. Now I can click here in results, check the reports, and we have a series of reports that we can use in here. We have this object analysis sheet. Here we can select some specific month. Let me just grab the data for January. Okay, and here I can see all the data I have for all the cost centers, and I can see all the distributions that these cost centers are receiving. So for example, if I do click on this one, I can see all the values coming from my cost elements. Here I have it. I can see all the distribution it is receiving from the indirect cost centers that are distributed using distribution keys. And then I can know exactly how much costs are allocated into the cost centers. After we import this, we can come here in the cost centers. In production activity, we can check exactly how much hours of work we had for each one of the months for this cost center. And we could also compare this to my planned production activities. Now coming for the other reports, we have the cost element entries that details the values for the cost elements. And tells you to which cost centers the values went. So here I have all the cost centers that received values from my direct cost element. So you can see it all in here. Then we have the cost center report. Showing the values that each cost center received from the different cost elements and also from the distributions. This value, of course, comes from the financial data and is distributed according to the production activities and the distribution keys. Then we could also have the cost unit profit and loss statement, as I have showed you before. We have the cost rate trend report that can display to you the actual cost rates for the resources based on their actual costs and their actual production hours. And then we have the absorption costing report. This absorption costing report you are only going to see if you do use absorption costing function. And this displays to you the actual cost for each one of the items you have produced in a month, for each one of the orders and for each one of the batches that you have produced. So here I have all my orders, all the items that I produced. Here I have the batch or serial number that I generated. Here is the warehouse in which the item actually is, the amounts that we have produced, the planned amounts also, and here is the appropriation for each one of them based on the financial data for the month. So the absorption quotient will allocate all your current financial data into your production, okay, based on the quantities that you have produced, on the cost centers you have used for that production, on the costs associated into each one of the cost centers. And there are some other functions that absorption costing does. For example, controlling if the item has been produced in the month or not. For example, let us say that we have started the production in the current month. We have done some works in the current month, but we have not been able to finish the work in the current month. So it means that I cannot appropriate cost to an item that still doesn't exist. And what absorption costing does is that it keeps this value as an open value for the next month. And in this column called WIP, we can see all the values that are going to be kept into for the next month. So for example, here I have 3 orders that were not completed in January, and the values were kept open for the next month. If we go into the next month, let's say February, we can see all the values that are coming from previous months. And these are the values that in the past month were kept open for this month, if we did complete the production in the current month. And there's something else that it still does that we can check on the columns that I'm going to show you. There is transferring costs from sub-assemblies into finished assemblies if both of them were done in the same month. For example, let's say that I have produced one sub-assembly and this sub-assembly have consumed my resources. It means that I should appropriate costs into the sub-assembly. But let's say that I have consumed the sub-assembly in the same month I produced it and I have used it to produce a finished assembly. So I don't have any more sub-assembly to appropriate costs into. And then business performance does a discount of costs into the sub-assemblies and adds cost into the finished assemblies. So these are all finished assemblies that received costs from sub-assemblies. And here at the last part of the absorption constraint report, we have the details of the marginal or full cost for each one of the orders. Remember that we have to revert the marginal or full costs. And we also have these discounts and additional for the marginal or full costs. After we check the absorption constraint report, we have three functions. We have the booking cost transfer. This is related to the first thing that I explained to you about absorption constraint, that is transferring the cost accounts into the an asset account, that is the cost to absorb account. So this is the stock, the journal entry that it does. There is crediting the cost reversal account and debiting the work in progress cost to absorb account. After that, we do a stock revaluation to appropriate the costs into our monthly production. This is all our work orders, our items manufactured, and this is how much of cost we are appropriating for each one of them. And then after that, we can revert the marginal or full cost to only have the real cost from the month appropriated into the items.